Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today, we'll be talking about one of the most important events of the year for the crypto sector, Crypto Week in the United States. A full week dedicated to votes and debates around three major bills that could reshape the future of the industry. These legislative initiatives, the Genius Act, the Clarity Act, and the Anti-CBDC Act, are being discussed in the U.S. Congress until July 18th, and they have the potential to radically change how cryptocurrencies are treated in the country. If you want to understand what's at stake and how these decisions could impact your portfolio, this video is for you. The week is crucial not only for the crypto market, but also for the future of financial innovation in the U.S., a proposal aiming to establish a clear and secure regulatory framework for stablecoins, digital assets pegged to traditional fiat currencies like the US dollar, payment platforms, and even local governments. The first bill under discussion is the Genius Act. It tackles one of the biggest regulatory dilemmas in the crypto space: the distinction between what qualifies as a commodity and what is considered a security among digital assets. Decentralized protocols such as Uniswap, AB, and Curve, which have been operating under a cloud of legal uncertainty. The bill requires stablecoin issuers to hold one-to-one reserves in dollars or federal government bonds, and to undergo regular, transparent audits. The goal is to prevent collapses like the terrorist crash in 2022, which wiped out billions in investor value and shook market confidence. This could reduce legal friction and encourage innovation, attracting more institutional capital and startups to the crypto ecosystem. The bill was easily passed by the Senate in June, but it faces resistance in the House, particularly from parts of the Republican base, who argue it imposes excessive regulation and bureaucracy. Even so, the proposal represents a significant step toward legitimizing stablecoins as mainstream financial instruments, which could pave the way for their broader adoption by large corporations. If approved, the Genius Act could bring greater stability and investor confidence to the stablecoin sector, which is already being used by millions across the globe. In India, already testing pilot versions of their own digital currencies. This could position the US as a safe haven for decentralized digital assets, encouraging innovation and adoption outside the reach of state-controlled finance. The second bill, the Clarity Act, the inflow of capital into regulated crypto products, such as the Ethereum spot ETFs, which saw $850 million in net inflows last week, shows that investors are betting on a clearer and safer regulatory environment. This classification is crucial for platforms like Coinbase, Kraken, Gemini. Currently, the SEC has taken a more aggressive stance. It's classifying nearly all tokens, except Bitcoin, as securities, which requires registration and compliance like traditional financial assets, and expanding financial sovereignty, which has been warmly received by Bitcoin, Monero, and other privacy-focused coin communities. The Clarity Act aims to provide a more objective and transparent definition, allowing companies and developers to operate under clear guidelines. Furthermore, the progress of the Clarity Act could reduce legal friction and allow centralized and decentralized exchanges to compete more fairly with the traditional financial system, something previously considered unthinkable. Many experts, like Peter Van Valkenburg, research director at the Coin Center, emphasized that this week could mark a real shift in the regulatory narrative. With clearer rules, the crypto sector can finally move past the label of a Wild West market and build a more stable, secure, and sustainable future. If all three bills pass, the country may position itself as one of the world's leading blockchain innovation hubs, attracting not only institutional capital, but also startups, developers, and decentralized communities. If passed, this bill could become the most important regulatory milestone since the first exchanges emerged, offering clarity and a level playing field for both centralized and decentralized platforms. The third and perhaps most controversial bill is the Anti-CBDC Act, which seeks to ban the Federal Reserve from issuing a state-backed digital currency without explicit congressional approval. The main argument from supporters is that a government-controlled digital currency would pose a serious threat to financial privacy, giving the state direct access to citizens' transaction history. This is a sensitive topic, especially with the global surge in CBDC development. With countries like China, Sweden, South Korea, the very fact that this bill is being debated in Congress reinforces the narrative of resisting centralized digital money if passed. The Anti-CBDC Act would send a powerful message. The future of digital money should be decentralized, not controlled by the government. Meanwhile, the market is reacting with optimism and anticipation. The stablecoin sector is also gaining momentum, with giants like PayPal, Visa, and Circle exploring new cross-border payment solutions and instant transaction networks. The passage of the Genius Act could be the catalyst that allows major retailers like Amazon and Walmart to begin integrating stablecoins into their operations, accelerating mass adoption. DeFi protocols also stand to benefit as liquidity and security improve under clearer rules. In the long term, the impact of this crypto week in the US could be historic. In addition, the Anti-CBDC Act sends a powerful message. The future of digital finance should be decentralized, not controlled by the state. This could further attract Bitcoin, Monero, and other privacy coin holders, reinforcing the US as a sanctuary for open market crypto assets. Regulation, once seen as a threat, is now emerging as the bridge between innovation and institutional acceptance. Stay tuned here on the channel for exclusive updates, in-depth analyses, and full coverage of everything happening in the crypto universe.